Hi, it's me again. Welcome to GST Accounting course using Sage 50 2015. To begin, in Lesson 1, we learn about the setup and settings. Throughout this lesson, you will understand how to enable the GST features and functionalities within the application and how to maintain key data elements for GST reporting. Setting up the GST registration details is important as it sets the system to enable GST functions for your transactions and produce required GST reports for submission when due. To enable GST features in Sage 50 2015, go to the Control Panel menu, select Settings, and then Company Profile. Check on the box Enable GST or VAT, and the rest of the fields will be enabled. Key in all the required information. They will be printed on your GST 03 form. Key in the GST registration number provided by JKDM upon approval of your GST application. The GST effective date is very important. It will tell the system when to enable the GST features. Let's say you set the GST effective date as of 1st of April 2015. On the 1st of April 2015, when you first log into the system, a message will be shown to inform you that the GST features is now enabled in the system. Next, set the taxable period as approved in your GST registration. If your business annual turnover is above Ringgit Malaysia 5 million, set it to 1 month for monthly GST filing. If your business annual turnover is below Ringgit Malaysia 5 million, set it to 3 months for quarterly GST filing. Depending on your taxable period selection, key in the appropriate next GST filing date. Let's say you set GST effective date as of 1st of April 2015. If taxable period is 1 month, then set date as 31st of May 2015. If taxable period is 3 months, then set date as 31st of July 2015. Lastly, complete this section by entering the major industry code for your business, the same code you entered in your GST registration. There are 6 important master data that you need to maintain to run GST application efficiently. The first master data is the GL accounts located at Maintenance menu, GL accounts. Create these 7 GL accounts recommended by Customs for GST treatment. GST input tax for acquisition, GST output tax for supply, GST control account to show net tax effect payable or claimable, GST liability for GST bad debt handling on customer, GST claimable for GST bad debt handling on supplier, GST suspense for GST on importation of goods, and GST expense for no claimable input tax. The second master data is the GST tax codes located at Maintenance menu, General, Tax. All Customs recommended tax codes are provided in the system, thus you do not need to create them by yourself. It is advisable to map appropriate GL accounts to the tax codes like Output Tax GL account to SR tax code, Input Tax GL account to TX tax code, and for specific tax code such as BL, Block Input Tax, which is not a claimable input tax, you will be required to map it to GST expenses GL account so that it will be reflected correctly in your profit and loss statement. The third master data is the customer located at maintenance menu, debtors, customers. It is important to ensure all information related to GST are filled into the customer maintenance as it is needed for GST audit file purpose. The fourth master data is the supplier located at maintenance menu, creditors, suppliers. It is important to ensure all information related to GST are filled into the supplier maintenance as it is needed for GST audit file purposes. RMCD approval number is meant for supplier, whom you will issue invoice on behalf of the supplier. For example, the Kelapa Sawit plantation farmers who may not know the market price of the Kelapa Sawit, so the cooking oil production company, who is their customer, will issue invoices on their behalf. The fifth master data is item group located at maintenance menu. Select inventory and billing, then item group. You can set the default purchase tax code and default sales tax code for each item group. We strongly recommend that you categorize your items by type of supply and link them to the respective item group for easy maintenance in the future. For example, if there is any change of GST tax code by customs, you only need to change it in the item group instead of each and every item. During transaction entry, if an item is linked to an item group, the respective default GST tax code will be displayed automatically. The sixth and last master data is item located at maintenance menu, inventory item. You can also map the default purchase tax code and supply tax code to each item for the GST tax codes to be displayed automatically during transaction entry. We have now reached the end of lesson 1. In this lesson, you have learned steps to enable GST features, fill up GST registration details, and maintain key data elements in master data for GST reporting. We shall move to lesson 2. How do you input the transactions? In this lesson, you will learn 3 important key areas. Number 1, how to enter GST related purchase entries. Number 2, how to enter GST related sales entries. And number 3, how to post transactions to accounting. Let us start with purchase transaction entries. The supplier invoices, purchase credit notes, purchase debit notes, and self-billed invoices are entered via the purchase menu. These transactions must be posted to accounting. When you make payment to your supplier, you will enter the payment transaction via accounting menu and offset with the invoices, credit notes, and debit notes. Let us guide you through each of these areas related to GST. There are supplier invoice and self-billed invoice, invoice outstanding within 6 months, and payment for outstanding invoices that are more than 6 months, import of service, import of goods, and also capital goods handling. When you receive a supplier invoice from your supplier, you will create it in the purchase menu at the supplier invoice. After you have selected the item, the related GST tax code will be shown with the GST amount calculated automatically. Once the supplier invoice is posted, editing will not be allowed. If you need to issue self-billed invoice on behalf of your supplier, you have to observe the following rules. First, make sure the supplier is a GST registered company. Secondly, make sure it is approved by customs and an approval code is given. Maintain the approval code in the supplier file maintenance. To enter a self-billed invoice, go to Purchase menu, Supplier Invoice. Click New icon and select Self-Billed Invoice option. After you have entered and saved the self-billed invoice, you will need to print a copy of the invoice and send to your supplier. With the GST regulation, outstanding supplier invoices more than 6 months must have the claimed GST input tax be refunded back to customs. Go to Accounting menu, Journal Entry, GST Bad Debt Journal AP. Click on Output Tax Adjustment. Select the supplier and all the outstanding invoices more than 6 months will be listed automatically. Select the invoices to refund the claim input tax to customs. Click on Generate Double Entry button and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts mapped in the Accounting Settings, GST or VAT Settings tab. Click Save to save the transaction and generate the General Journal entry. When you have paid to your supplier, for those outstanding invoices where the output tax adjustment has been processed, you may now claim those GST back from customs again. Go to Accounting menu, Journal Entry, GST Bad Debt Journal AP, then click on Input Tax Adjustment. Select the supplier and only outstanding invoices of the selected supplier where output tax adjustment has been processed for tax refund to customs will be listed. Select the invoices to claim back the input tax refunded from customs. Click on the Generate Double Entry button and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts map in the Accounting Settings menu, GST or VAT Settings tab. Click Save to save the transaction and generate the General Journal entry. All imported services acquired for the purpose of business, except exempt supply of services, will be subjected to GST. The GST on imported services is payable by the recipient of the services using the reverse charge mechanism. An item with service type must first be created in the system via Maintenance menu at the Inventory item. Entry for import of service is also done via Purchase menu at the Supplier invoice. Remember to click Import Service checkbox on the header to indicate that this is an import of service entry. When a payment is made and offset on this import service invoice, GST will then be computed. Reverse mechanism treatment for input tax and output tax is automated in the system to ease your transaction entries. When a payment is made either in partial or full and offset against this import service invoice, GST will then be computed. Reverse mechanism treatment for input tax and output tax is automated in the system to ease your transaction entries. Goods imported into Malaysia, along with its additional costs, are subjected to GST. The Import Declaration Form function located in the Purchase menu is introduced to handle GST computation on all these costs to ensure correct GST-03 return submission. Let's take a look at how the system auto-computes the GST and tax code for this entry. It is important to ensure appropriate GL account is mapped in the GST VAT settings for the system to automate the journal entry correctly. Note that the GST clearing account used here will be cleared off in either one of these two situations. The first, when shipment is handled by forwarder and a supplier invoice is entered, or when payment is made for direct handling. The definition of capital goods under GST context are: number 1, capitalized under accepted accounting principles. Number 2, used in the course of furtherance of a business. Number 3, not for the purposes of reselling. And number 4, each unit valued at Ringgit Malaysia 100,000 or more and exclusive of GST. Go to Accounting menu, select Maintain Capital Goods to maintain the capital goods details after you have purchased it. If your company is making wholly taxable supply only, then you can claim the input tax for the capital goods purchased in full in the period you purchase it. If your company is making both taxable and exempted supply, then you will need to make annual adjustment to the input tax claim. For equipment, machinery, and vehicles, it is 5 intervals. For land and building, it is at 10 intervals. When the transaction is saved, the intervals will be populated according on the type selected starting from the year of purchase. Now, let us discuss about sales transaction entries. The sales invoices, sales credit notes, sales debit notes, and cash sales will be entered via sales menu. These transactions must be posted to accounting. When you receive payment from your customer, you will enter the receipt transaction via accounting menu and offset with the invoices, credit notes, and debit notes. Let us guide you through each of these areas related to GST. They are the tax invoice, credit note, and debit note with or without reason description. Prepayment is an important aspect too. We will learn about bad debt relief and also the bad debt recovered. When you want to issue an invoice to your customer, you will create an invoice. After you have selected the item, the related GST tax code will be shown, and the GST amount is calculated automatically as well. You can print a tax invoice from the system. Once the invoice is posted, editing will not be allowed. According to Goods and Services Tax Act 2014, if there are changes in quantity, amount, tax rate, or cancellation of transactions, credit note or debit note must be issued by related parties. When you create a credit note, remember to click on the Select SI icon after you selected the customer. The system will prompt the invoice list for the selected customer. Take to select the relevant sales invoice and all its information will be copied onto the credit note screen. In the body section, select the reason of issuing the credit note. The reason is maintainable at Maintenance menu, General, then select Reason. Note that the related invoice number, invoice date, and the reason is printed on the sales credit note. The same concept will apply for debit note as well. When you receive prepayment or advance payment from your customer, which will be used as part payment for the supply, you will need to account GST for the prepayment or advance payment. The prepayment or advance payment received will be considered as inclusive of GST. When you enter this type of receipt, select the advance payment option, followed by the sales type, local or export. This is important as it uses different tax code, SR for local sales and ZR for export sales. Once the receipt entry is saved, financial entries will be generated with GST inclusive. In the GST regulation, outstanding sales invoices more than 6 months can have the paid GST output tax claimed back from customs. Go to Accounting menu, Journal Entry, GST Bad Debt Journal, AR, then click on Bad Debt Relief. Select the customer and all outstanding invoices more than 6 months will be listed automatically. Select the invoices to claim back the paid output tax from customs. Click on Generate Double Entry button and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts map in the Accounting Settings, GST or VAT Settings tab. Click Save to save the transaction and generate the general journal entry. When you receive payment from your customer for those outstanding invoices where the bad debt relief had been processed, you may now have to refund those claimed GST back to customs again. Go to Accounting menu, Journal Entry, GST Bad Debt Journal AR, then click on Bad Debt Recovered. Select the customer and only outstanding invoices of the selected customer where bad debt relief have been processed for tax claim from customs will be listed. Select the invoices to refund the claimed tax back to customs. Click on the Generate Double Entry button and the financial entries will be generated automatically. These financial entries are generated based on the GL accounts mapped in the Accounting Settings menu, GST or VAT Settings tab. Click Save to save the transaction and generate the general journal entry. Transactions from inventory and billing modules must be posted to Accounting. Only posted transactions will be taken for GST reporting. This is to comply with GST Act, where confirmed and posted transactions cannot be edited and will remain unchanged to support the values reported and submitted to customs in the case of an audit call. Changes, if required, will be carried out via appropriate adjustment documents like credit note or debit note. We have now completed Lesson 2. In this lesson, you have learned about important GST areas in purchase entries, important GST areas in sales entries, and the importance of posting and export-import of bills. In Lesson 3, we will cover the required reports for GST implementation. Here, you will learn about some important documents and reports related to GST. There are the required fields for a valid tax invoice, credit note, and debit note. Any of these fields not shown in the source document will be considered as invalid GST source documents. Issuing an invalid GST source document is considered as fraud and will lead to penalty and jail imprisonment. There is also print control implemented for printing of source documents. When you print the source document again, the word duplicate copy will be printed. For self-billed invoice, make sure the approval number is printed on it. This system provides a wizard-driven guide on generating the output similar to that of GST-03 form to facilitate users in processing the periodic GST return. The GST return function is located at Accounting menu, Tax Reports, and at the GST Return MY. Just go through each step and check the amount generated. All the amounts shown on the screen are not editable. At the end of the process, if you click Submit, the report is final and the print button will be available for you to print out a mock-up of the GST-03 for reference. You may use it as a reference guide when processing actual GST return on the authority's website. You can also generate the tab file for online submission. If you save the report as draft, you will not be able to print the GST-03 form and also not able to generate the tab file. These two tax reports are provided to assist you in reconciling the amount shown in the GST return with the list of detailed transactions. Tax report shows all the transactions grouped by respective GST tax codes. Purchase and supply report shows all transactions grouped by transaction type. GST audit file is one of the mandatory reports that is required under the GST ruling and needs to be produced and submitted upon request from JKDM when conducting periodic audits to ensure tax returns are being prepared correctly. GAF is a file containing standard set of accounting information found in General Ledger together with detailed breakdown of business transactions found in details of invoices, orders, and adjustment for audit purposes. You can generate either in text format or XML format from the system. We have come to the end of GST accounting course using Sage 50 2015. In this lesson, you have learned about the mandatory fields in a valid GST source documents, print control, and all GST-related reports such as the tax reports, GST return, and GST audit file. Thank you for learning and have fun with your new Sage 50 2015.